Silicon Valley Bank, they're the latest bank that went under. So some people might be questioning, is this a repeat of 2008 financial crisis when we saw the Lehman Brothers Bank go bankrupt? And I believe that was the largest bank in history to go bankrupt. And Silicon Valley Bank, they're the second largest. However, on the grand scheme of things, they're about the 16th largest bank in America. So they're not even in the top 5. Slight correction here. The list of the largest US bank failures doesn't actually indicate Lehman Brothers was a bank. Washington Mutual was the largest bank to go bust, and this was in year 2008. Silicon Valley Bank is right behind them. Lehman Brothers, though, they are not considered, a traditional bank. They're actually an investment bank. And they were the 4th largest investment bank in US with 25,000 employees, and it had $639 billion in assets. So Lehman Brothers was actually in fact larger than Silicon Valley Bank and larger than Washington Mutual. But let's go back to the content. Silicon Valley Bank is geared towards technology startups as well as health tech startups, and they are also a bank to a lot of venture capitalists. So a lot of the, rich people bank with Silicon Valley Bank. But because of the nature of Silicon Valley Bank's business, they have a lot of exposure to high-risk clients, like venture-backed startups. These startups often are burning cash in order to fuel their growth without a possibility of profitability in the near term. So there is a significant amount of risk, which Silicon Valley Bank has tried to rein in by investing in safer assets like Treasury Bills. So if you guys are unfamiliar with the whole story, let's back up to last Wednesday when things started to go downhill. So last Wednesday on March 8th, that was when they released their earnings report. And coincidentally, they also were selling shares on the market to raise capital. I was trying to do a bit more research onto why the management team decided to release shares, because in their public statement, they didn't actually give a reason why. So going through the official announcement, here is kind of the hint as to why they decided to sell shares of around $1.75 billion. Because additionally, earlier today, SVB completed the sale of substantially of its available for sale securities portfolio. SVB sold approximately $21 billion of securities, which will result in an after-tax loss of approximately $1.8 billion in the first quarter of 2021. So this lines up with their $1.2 billion offering of common stock and $500 million of depository shares to cover that $1.8 billion loss. And the announcement of the share raising happened around 4:06 p.m. And at that point, I think this is when VCs started to inform their companies, their venture-backed companies, to withdraw all their money from Silicon Valley Bank. And this essentially caused a bank run, because these venture capitalists, they obviously talk in the back room, and each venture capitalist typically is responsible for hundreds of startups. And not only were these just any random venture capitalists, they were actually some of the top venture capitalists in the Silicon Valley area. So all the most promising startups who probably raised a butt ton of cash in like the tens or hundreds of millions of dollars were withdrawing cash. And this is the bank run that we saw at Silicon Valley Bank. And immediately after that happened on Thursday, we saw Silicon Valley Bank stock drop. And this news flooded Twitter. And obviously a lot of founders are on Twitter, so they decide to make their moves and withdraw their money from Silicon Valley Bank. So everyone was initiating wire transfers, and at some point in time, Silicon Valley Bank ran out of money. Because the bank, when they get your money, they don't just hold it in cash. They actually go and invest it in something. Some banks will invest it in riskier things like mortgages. However, Silicon Valley Bank had most of their assets in things called Treasury Bills. Essentially what they're doing is they're buying these government issue bonds, which pay a fixed amount of interest. But the problem with Silicon Valley Bank here is that they bought a lot of those bonds back when interest rates were low, in 2021 and early 2022. And because interest rates are like 1 or 2% on 10-year treasuries, and today the interest rates are 4 or 5% or somewhere around there, at least they're a lot higher, then the value of those treasury bills has gone down. Just note that this loss is only temporarily on paper. If they hold a treasury bill to expiration, then they do get their initial investment back. But it's only because interest rates have risen. Therefore, people aren't willing to pay the full price for that treasury bill because they could be earning a higher interest rate if they bought the current treasury bill, which has a higher interest rate. Before moving on, we had a quick pause to talk about today's sponsor of the video. Cantech Letter is a website focused on businesses that operate in the US as well as Canada in the technology sector as well as the biotech sector. They also like to highlight some up-and-coming companies that are a bit smaller that you might not hear from major news outlets. If you guys want to keep tabs on these smaller companies looking for maybe possible wedges into the market where you're going to make 200, 300, or 400% on your investment, then you want to sign up for Cantech Letter to get the latest updates on these companies. But if that risk is not your cup of tea, that's okay because they do cover larger technology stocks as well as companies like Air Canada or banks. So they've got a little bit of everything for everyone. Consider signing up for the newsletter down below with the link, or just check out the website and see what articles they have to offer, and I hope you can find their articles as useful as I do. So now the bank run has happened on Thursday/Friday, the FDIC steps in and shuts down Silicon Valley Bank so that people cannot withdraw money. This stops the bank run and leaves everyone panicking as to what's going to happen to their hard raised cash, because a lot of these startups are running on other people's money right now. So over the weekend, there's a bunch of talks that happen in the financial institutions as well as the government level. And they just released an announcement about 2 to 3 hours ago that all the deposits will be released on Monday for people to access. And what will happen is the Federal Reserve will be the backstop for Silicon Valley Bank. But it's not in the same way that the government's bailing them out. They're willing to loan Silicon Valley Bank the money that they need in order to fulfill the depositor withdrawing money from them. So now we're left with a question of how many people actually withdrew their money from Silicon Valley Bank. We don't really know those numbers yet, but we do know the numbers of some companies who have held assets with Silicon Valley Bank. And if you look at the list on the screen here, you can see there are some major companies that hold assets with Silicon Valley Bank, like Roku as well as Roblox. But another thing you should notice here is that they only have a portion of their assets in Silicon Valley Bank. So a lot of these companies who are hit, especially who are public companies, they didn't lose all their money because they do some sort of risk analysis, and obviously they don't put all their eggs into one basket. Especially Silicon Valley Bank, which is a 16th largest bank, rather than someone like JP Morgan Chase or Bank of America. So a lot of these public companies will be able to make payroll easily for the next year or so, especially if they have less than 20% of their assets with Silicon Valley Bank. But now, if you guys are a tech worker like me and your startup banks with Silicon Valley Bank, you might be wondering, what's going to happen to my job? Will my company go under? And I think the answer largely lies with, what was your company doing with their money in Silicon Valley Bank? Have they invested it in more higher risk assets that are not protected, or do they just purely deposit the money into some sort of like savings or checkings account and they've invested in Treasury Bills? If your company has done that, most likely they're safe and they're going to be able to continue to make payroll. And you get to walk away pretty much scotch-free with maybe a few nightmares the past couple of nights. But I'm sure a lot of founders are going to be withdrawing the money from Silicon Valley Bank, and this bank is probably going to shut down. That's just my speculation because we don't know yet. They may be able to spin up some story that keeps a lot of these tech startups banked with Silicon Valley Bank. Maybe they'll give a lot of incentives to try to retain customers. But most prudent founders will likely take at least a portion or a good chunk of money out of Silicon Valley Bank and go elsewhere to diversify and not have to worry about bank runs when they're running a business. So that's all I got for you guys today. If you guys have any questions about SVB, please leave them down below. I'll be continuing to follow this story because I'm also affected by it as well. So I'm going to be monitoring this situation very closely to see what happens and whether my company gets their money back or not. Keep up the grind and have a great day.